Hello and welcome back to another video. Today's video I'm going to be sharing with you how I managed to make 3.5% trade in EURUSD as a result of market participants' trading actions. I'm also going to be sharing how I actually managed to use dollar index 10-year US government bonds to make a more informed, predictable and probable trading decision. First things first, let's actually start off with our analysis on the 10-year US government bond. As you can see from this sweep of internal range liquidity and tapping in some of our imbalance in price action, we actually managed to see a run down. Now from this point onwards, more likely than not, market participants were going to make a run for some of our previous levels. As seen today, we made a run for our previously low and some of our previous levels here. Now, once we've actually purged this low, more likely than not, market participants are actually going to, retrace price back into the leg that actually purged the low. Very similar for DXY, as it obviously has some sort of mirroring involved. When the 10-year US government bonds go up, more likely than not, dollar index is up. So let's get back onto our analysis on the dollar index. As you can see, before we actually made the run for our previous week low, we actually managed to sweep some of our internal range liquidity. Nothing too significant, as we actually managed to not tap into our 4-hour fair value gap as highlighted in the Telegram. However, very similar, as mentioned, as soon as we actually, purge our previous low, more likely than not, we are going to be anticipating some sort of retracement back into the leg. Now, adding to the probability, as you can see, we actually don't have any USD high impact drivers today. So more likely than not, we are going to see a retracement back into the leg we created, rather than making a run for some of our external liquidity, such as some of our levels lower here. Now, more likely than not, these levels obviously will be purged with our high impact news drivers. Let's actually jump into some of the intraday analysis. So, as you can see, pre-130 and pre-true market open for New York, we actually saw a range of consolidation. Now, as soon as we actually got our true market open for New York, we actually saw this low being swept, setting us up with the, foundation for our AMD framework. Now, more likely than not, this was going to be a retracement down to our AMD framework and how we actually managed to purge our low before 130. As mentioned, 130 is more likely going to be a retracement to a fair value gap or a run for some sort of liquidity. Now, we've already actually had the run of liquidity. So this is where timing becomes key and adds to ability and prediction where market participants are likely to trade next. As you can see, we retrace into our OTE and we see, clear intent that market participants do want to trade price higher. We actually see our candle here, where I actually managed to execute my second position. So let's actually get into analysis and execution. So for my first position, as soon as we managed to break this low here and create some of our inversion imbalance, this is where I actually executed stop loss just above the high that liquidity managed to actually raid. Now, as soon as price materializes and actually manages to blow this low here, this is where I'm immediately putting my stop loss down and reducing the overall risk on my position. When we also break this low, I look to scale in another 0.5% in my trade, first also 0.5%, and place my stop loss where I actually shaved my original stop loss to. Now, as soon as we actually traded lower, past the low that actually caused the retracement, and this reaction downside should tend that market participants do want prices to go lower. This is where I shaved my second position break even, my first position where my second position's break even was. Now, my target is actually this volume imbalance inversion towards the sell side, press back into the leg that I'm actually managed to purge our previous high. So Going on to into the latter of the week, what I'm now actually anticipating is market participants to trade price lower towards our previous low. Now, I'm not looking to rush into any positions. I'm up 3.5% this week. I want to maintain what I've actually made. I'm going to be rotating account and do get into a very high profit trade. I'm actually anticipating some of our new drivers to actually clear out some of our internal bridge liquidity before we actually see the framework of some sort of, reversal post our internal liquidity being swept. Now, until this low is actually swept, I'm going to be holding off any trades. And as mentioned in my outlook, due to us still obviously trading within our weekly fair value gap, quite easily, drivers create manipulation to the low, then expansion to the upside. So that's also why I'm obviously waiting for some of our high impact new drivers to present itself and price to actually materialize in a fashionable manner or actually take a trade. Overall, I do hope this video helped, and I'm obviously updating it in the Telegram what market participants choose an action to price is be in live time. So thank you very much for listening if you did make it this far, and feel free to drop any questions or message me private.